Hello, good afternoon, and welcome to today's webinar. My name's Jackie, and today we're looking at part 3 of our VAT series, which is around running reports for confident reconciliation. Don't panic if you missed parts 1 and 2. They are available online for you to watch at a time that suits you. So I will show you where you can find the recordings at the end of the session today. So they can be followed up, and today can still be a standalone session in its own right. So today's session means your microphone is placed on mute, but we do try and get you involved on this session, okay? So we do ask you to send any questions you may have, but we also ask you to try and get involved. So we're going to look at some reports and try and reconcile them, and we'd like you to try and use that questions panel to submit your questions to us, so your answers to us. Do not worry, we aren't going to call out anyone for getting it incorrect. It's just a little bit of fun just to try and make these sessions a little bit more interactive. There is a handout for today's session, so you can take a copy of the slides which go through everything we're going to cover today, and that is the icon that looks like a document with the folded corner there if you want to take a copy of those. They'll be available throughout the session. And like I say, there will be a link in the follow-up email as well to the future webinars and also to watch recordings. Now, what I did just want to do just before we jump into the content is just bring your attention to what we've got coming next week. So next week, really exciting, we are moving on to our next digital badge. We last did one for International Accounting Day in November. Next one starts on Tuesday and runs through most of February. Gives you plenty of opportunity to get yourself registered for those sessions. I'm just going to bring this across very quickly without breaking my session for today. So this article here is the one that's in the chat right now. Okay, so this will allow you to register for our sessions. We have 8 sessions. We're delivering each one twice to give you a choice of dates, and you need to attend 6 of the 8 plus the quiz to earn your digital badge. So you can see all the sessions there, so get yourself registered. Okay, there will be more information on that later on. We'll show you a quick video, but I am aware people do have to drop off. Wanted to catch you early in the session today. Back to today's session though, we're going to first of all do a really quick poll to find out what VAT scheme you're using. And then we're going to look at the drill down feature, and we're going to look at the different reports we recommend to run. So first of all, looking at the detailed VAT report, and then comparing that against the daybooks reports. And then we're going to run through reconciling the differences, and that's when we're going to get you guys involved so that you can have a go at trying to reconcile them and see why there are differences between those reports. Today's session we are running on standard VAT in the UK, and this normally doesn't impact you if you are doing the Republic of Ireland. There'll be similar reports for you, and the same if you're on a different VAT scheme. There will be reports, so we do just cover VAT cash accounting very briefly later on, but all of the boxes will need to be looked at and the same reports will apply for you, but I'll show you the differences along the way there. Okay, so first of all, I am just going to pop our first poll across, and this is just to find out if you are doing a UK or a Republic of Ireland return. So if you can, just tick the boxes relevant to you. If you're doing both, maybe just pop something in the questions panel for us there so we can see that you do both. Some people do find themselves in that position where they're doing both a Republic of Ireland and a UK return. Okay, so I'm just going to wait for those results to come through. There is a slight delay, so they do take a moment or two to come through. And there we go, they're starting to filter through there now. I'd like to try and get about 70% of the vote just to give a good sort of sample of you there. So I'm just going to close that down and I'm just going to share this. So you can see there 76% of you on a UK return. So that's why we're doing it in a UK data set. But like I say, the principles are pretty much the same if you're in the Republic of Ireland. Next poll I'm just going to run is just which VAT scheme are you on? Okay, if you're not sure, don't worry. We're not going to test you on this. It's just to get an idea, like when we're picking these companies and a data set to use, are we using the right ones? So again, if you can, just pop your answers across. If yours isn't on there, by all means, you can use the questions panel again. Okay. So we've got quite a few of you voting there. Let's give it another moment or two. And again, we've got to 70% there, so I'm just going to close the vote there. And I'll just share again. So 86% of you on standard. We've got a small portion on VAT cash accounting and some on partial exemption. So if you're on VAT cash accounting, the reports will be slightly differently named, but the principle's the same. And again, on partial exemption, there will be boxes that you need to reconcile using the reports we're covering today. Okay, so the first thing we're just going to talk about, so I'm just going to share my screen again, is the drill down feature. Okay, and this is across the board, across all UK and Ireland and all VAT schemes, you will have the drill down function. Now, when we did Making Tax Digital, which is a few years ago now, this is pre-COVID, what we noticed when we were doing one-to-ones for that in the UK was lots of people weren't aware of this feature and weren't really aware what this feature could do for them. So the drill down feature is available on most boxes of the VAT return. The boxes it's not available on are the calculation boxes. So in this example here in the UK, you can't drill down on box 3 because it is actually the sum of boxes 1 and 2. So if you want to drill down, you need to look into the drill down for boxes 1 and 2. So I'm just going to pop into my data set just to quickly demonstrate this. I've got a VAT return that I've just done here. And for example, to drill into box 1, we can use a little icon here. And what that does is it shows us the breakdown of transaction types and also the tax codes that make that box up. So if you're on, for example, VAT cash accounting, yours won't say sales invoices, but it will say sales receipts and transactions that are relevant to that scheme. So yours might look slightly different, but the principle's the same. I've got a value in here, which is sales invoices on a T1, and I can drill into this further, right down to the transactional level. So you might have a couple of hundred, sometimes in some cases a couple of thousand transactions in this window, but it will show you each and every transaction that are making this figure up here. And this is another good place for reconciling figures, because what you can do here is you can send this to Excel. And obviously in Excel, you can do things like filters, sorts and searches, etc. Now this drill down feature here can also be useful if you're thinking about what reports to run, which you'll see in just a moment. So this tells me here on this window that in this data set, I need to be running reports that show me sales invoices, some sales credits, sales receipts, and journal credits. So if you're ever thinking, I can't remember what reports to run, sometimes the drill down might help you with that. So I'm going to just show you that in the slides here. So I'm just going to pop back to the slides. I'll just skip ahead. Just going to skip ahead a couple of slides just so I can show you this image here. So this image here just shows you how to use that drill down feature to work out which reports you need to run. So we'll come back to that in just a moment for you. I just wanted to show you that while we were talking about that. I'm just going to go back so we don't miss anything out. Okay. Now, what's also handy with the drill down feature is it also shows you what tax codes can impact a box. Okay, so if you're ever thinking I need to impact box 1, what tax code do I use? A good place to start is to come into box 1, into the drill down, and see what tax codes would impact that box. That's a good place to start. Then there is help and support on our help centre as well, which will help you work out which one is the correct one for you. As I mentioned, on the help centre there's help, so we've got a link there for the UK tax codes and also for the Republic of Ireland tax codes as well. So if you've got a copy of the download there, you'll be able to click on those links and it will take you directly to the article online. So that is the drill down, and as I mentioned, it's on quite a few of the boxes, so you can work your way through each box just reconciling those figures. So we're going to move on to the reports. Okay, so when customers ring us and ask for help reconciling, we have the recommended reports that we suggest you run and compare against one another. Now, what these reports won't do is tell you if you've missed something off, okay? They show you what you've entered and you can compare them against each other to check for incorrect postings or anomalies, but it won't say you forgot to post that invoice. It's not quite that clever. So the first one we're going to do is the detailed VAT report. So this detailed VAT report can be found on the second window of the VAT return. Do not worry, I will demonstrate this in just a moment. And it's in the option to print VAT return. And in here, you get several different options. You get to do the VAT return, which is literally box by box, the figures. You get a summary, and we're looking for the detailed. And this is going to be quite a lengthy report. It is box by box, tax code by tax code, each and every transaction which impacts the box. Okay, so it will be quite lengthy. Certainly do not just send it to print. You might kill off a couple of trees. You might want to save this by downloading it first before you decide if you're going to print that off. But there are other variations of this report, so you can run a report to show any earlier unreconciled transactions, and also you can run it to show transactions by department. That's probably the one I've used the least. And as you can see, you've got the option to either preview it, you can save it to file, you can email it. Like I say, this is probably your last option with the size of this particular report. So it is a really detailed report. So as you can see, I've got a demonstration of it here. Now I'm going to be showing you box 1 of the VAT return, and I've only entered about 13 transactions, okay? And alone that's taken 2 pages. So you can see where we're going to end up if you've got hundreds of transactions here. But this is what it looks like, okay? So it shows you box by box. So first of all, we're in VAT box 1, sales invoices using a T1. Then we stay on box 1, but we're looking at sales credits using a T1. Moving on to receipts, again using a T1. So again, the more tax codes you use, the more you're going to see on this page here. So it is really quite detailed. Again, in the Republic of Ireland, it's pretty similar. So we've got a copy there from the Republic of Ireland. It's just that the boxes are named slightly differently. So again, you can see we're in box T1 using a tax code T1 and sales invoices. And it works its way down. So to show you that, first of all, show you how to actually run that report. I'm in the VAT return. I've popped in my date range. So I just want to highlight here that this is going to be a bit of a clue for when we get to the interactive part. I've run my VAT return from October to the end of December 2024. So it's pretty much due now. So you can see the date on here quite clearly. So we're in step 2. So we've clicked calculate, but we haven't yet reconciled. Okay, so we've taken our backup to make sure we've got a point of return. And now we're in this one where we can run our reports. So to print the VAT return, all we do is pop into print VAT return, tick which one we want to do. So I'm just going to do the detailed and run. And it just generates it for you. The key here is it did not ask me for a date range. Okay, it didn't ask me for a date range because it picks up the date from the VAT return. So we've selected that date range when we ran the VAT return. And that's what it looks like essentially. So as I say, I've got 13 transactions, as you can see in the bottom corner, and that's taken me across 2 pages. Okay. So we're going to look at that report again in a moment, but firstly, I need to show you the other set of reports that you're going to need to run. So I'm going to close this down because I have got one that I created earlier. So back to the slides. So what reports we recommend you run this against are your daybooks reports. Now, previously, when I was on technical support, we're talking about a while ago now, I think over 8 or 9 years ago, these reports were located in various parts of the software. So if you wanted one for customers, you needed to go into the customers module. If you wanted one for suppliers, you needed to go to the suppliers module. However, we've now combined these and we've got them all held together in one place to make that far easier for you just to access the reports you need. So the daybooks reports can be found in the VAT return under that button that says reconciliation reports. And the reports that will be available, again, are filtered based on your VAT scheme. So I will again demonstrate this in just a moment, but as you can see here, I've gone into the reconciliation reports, and here it's showing me standard VAT because I'm in a standard VAT company. So it will only give me reports relevant to that VAT scheme. Okay, so again, we're trying to help you make the right choice on those reports. So as I mentioned earlier, so this is back to the slide I sort of previewed earlier, we can't just run one report to compare it to, okay, because we've got lots of different transaction types here. So we need to run several, even just for one box. Okay, so if you think about the UK return, you've got 9 boxes, you've probably got around 6 or 7 boxes that you need to reconcile. And for each of those boxes, you're going to have to run different reports. So as an example, we've got box 1. What I'm going to need to run is one to show my sales invoices or my customer invoices. So I'm going to be running the daybooks customer invoices, daybooks sales credits or customer credits, daybooks bank receipts. Now this is also in there with cash receipts and credit card receipts, but bear in mind you might not use the cash receipts function or the credit card receipts function, so those might come up blank, but it's always worthwhile running them just to double check. And then finally, daybooks nominal ledger. So essentially, for me to reconcile box 1, I've got about 6 reports I'm going to have to try and generate. Okay, so this isn't a really quick process, unfortunately. It is something that's quite manual, but this would make sure that all of your VAT is correct, and that's what we want when we're submitting to HMRC or ROS. Okay, so I'm going to move away from the slides now because I'm actually going to demonstrate how to run those reports, and then we're going to do the interactive element of it and try and do some comparison of these. So I'm just going to pop back to the slides. So as I mentioned, we're going into reconciliation reports, and we just expand this section here, and you can see it's giving me standard VAT. So spoiler alert, if you're on VAT cash accounting, this would in fact say VAT cash accounting for you. And then when you expand on here, it gives you the different parts of the software. So I'm just going to bring up my detailed report. So I did, like I say, create these earlier. I'm just going to try and bring them all back. Apologies, they always tend to move around. I'll just remove that one there. And I'm just going to minimize that one for a moment because this is my detailed VAT report here. This detailed VAT report can also give us clues as to what report to run. Okay, so we're going to look at box 1. So remember, box 1 in the UK is the VAT on sales. So the first bit I would be looking at is, okay, we're looking at box 1. We're looking at sales invoices. So I need to run our daybooks report that's going to show me sales invoices, and we're looking at a T1. So I can go back to my software. I'm looking at sales. So sales are to my customers. So I can just expand on customers. Now, this is where it differs depending on your version. Okay, now if you're on version 30 and below, you'll have more reports in here. You will have one that says Daybooks sales invoices or Daybooks customer invoices. You'll also have one that says Daybooks customer credits. So they are separate reports. Now, what we've done in the recent versions is we've consolidated some reports, because what we found was we had huge amounts of reports that essentially did the same thing, and we've just added a criteria on. So like I say, if you're on version, I think it's 30 and below, you at this point would be running a Daybooks customer invoices report. But on my version, I'm on version 30 at the moment on this particular one. What I need to do is run the Daybooks customer transactions. And in here, the first thing I need to do is make sure it says invoices. If I wanted to run it for credits, I just change this first box here. So we've consolidated that report into one. So I'm going to leave it as invoices. And the only other thing I need to change on here is the date range. And that date range needs to match what I'm running my VAT return for. So it needs to be 1st of October 2024 to the end of December 2024. So the period that you're submitting for. And then it will generate the report for you. Same with customer credits. Same report in this case. We've just changed that to credits, and then I would just need to change that date range. So I'm not going to do those. I'm not going to generate them because, again, I have got something I created earlier, which is a lot easier. I've tried to zoom in and make it as visible as possible for you. So what we're going to do is we're going to start with those two reports, customer invoices and customer credits, and look and see if we can reconcile those. So bear with me while I just bring my screens back. And just make sure this is my Daybooks customer invoices. Okay, so what you should be able to see there is we have VAT report on the left hand side, and we've got the Daybooks on my right hand side. So what we're looking at is we're comparing these transactions here on the Daybooks against this section here. Now what I'm just going to try and do is just highlight this section that we're looking at. That's not the one I was looking for, apologies. Normally have a highlight option. Well, essentially is this section here, okay, the ones that I've just popped into green. And what I'd like you to do is just look at the two and see if you can work out, I'll just move this one along ever so slightly and zoom out, why we've got differences. Okay, if you can spot the differences between the two, please do pop it in the chat. And if there's a reason why, can you see a reason why there are differences? I think we've got all the information on the screen you need there to be able to see. Okay, so we're looking at the green section, comparing that against the Daybooks, and we're hopefully trying to match them across to one another. Okay, but there will be some differences. Can you tell me why and what the difference is? So take your time and don't be shy. Please do, if you can, just pop what you think into the chat. Like I say, we are not going to out anyone for getting it wrong. It's just really an opportunity to have a go at this. And yeah, it just takes a few minutes for your suggestions to come across because there is a slight delay on the system. And there's no points for getting it wrong either. For getting it right, unfortunately, we won't be handing out any prizes. It's just an opportunity to have a go there. And again, if you're familiar with VAT returns and you can see a difference and you want to put a punt out there, why? More than welcome to. Fabulous. We've got some people giving it a go. So thank you for joining in. Perfect. So transaction number 1 is missing. There's an item for £240 not appearing on the Daybooks. Indeed. Okay, so see, they all come through together now. We've got a few of them there. Perfect. And an additional transaction. Yes. Okay. So what we have here is transaction 1 is showing on the VAT report, but not on the day books. And I think someone has just nailed it on the head there. In fact, 2 of you have. Yep. So number 1, transaction number 1 is not included on the day books. Now, I've probably hidden the clue from you, but I was kind of wanting to see if you get it. It's on the VAT report. When I generated the VAT return, I had something called an earlier unreconciled transaction, and that tells me up in the top there. So my VAT return gives me the opportunity to look back prior to the date of the VAT return to sort of scoop up any unreconciled transactions. And if I say include, which I have here, it includes them on the VAT return. But the day books do not have that feature. The day books will literally only look for the date range you specified. So what we have done is we've picked up a late entry here. So transaction 1 for customer 1 was at the end of September. It was added late. It was added after the last VAT return was run. And so we need to include it in the next return. And that's fine because we can justify the reason why that's come through. Okay, if we can't justify it, like why is it there? We might need to go and revisit that transaction. Do we need to alter the date on that transaction so it shows on both reports? But if it's genuine, then it can be left. Just going to shuffle this back a bit. So we do also have one other transaction that's different. Okay, I don't think anyone picked up on this one. So we've got transaction 6. So transaction 6 was showing before. Transaction 6 is showing on the day books report, but it's not showing on the VAT return. Again, if you want to have a little go as to why, the clue is there on the screen, which indicates why. And it's not that it's not showing up on the VAT report. It's just not showing in this area of the VAT report. So just having a quick look there. So this particular one is due to the tax code. So if we have a look at the tax code, yep, they're coming through now. You can see the delay. So yeah, it's the tax code. So T0. So it is a VATable transaction, but the rate is 0. So it's not showing in box 1 because the tax amount is 0. Where it will show on the VAT return is in box 6. So if we scroll down a little bit on here, we can see that £500 is in fact in box 6. So it is on there. And I think all of you have now got that. It's just come through late. So thank you for taking part on that one. And again, all you need to do at this point is check, is that right? Should this transaction be T0? Should it be T9? Is it non-VATable? Or is it in fact T0 and that is what it is? And if it is, again, we can justify that. That's fine because it's a T0, it's a 0 rated item. So excellent. I think everyone's got the gist of that one. I'm just going to show you the detailed report for the customer credits. So day books customer credits report. So again, what we'll be doing next on the VAT return is moving to the next section, which is the sales credits on T1. And as you can see there on mine, I've got transaction number 9 and we've got transaction number 9. So there's no work to be done there. We've been able to reconcile the two together. So I'm just going to go back to the software because the next one is where you might get some reports that won't generate. So the next part of the detailed report, sorry, I'm just going to pull this back up, apologies there, is we've got VAT box 1 receipts. Okay, so this is referring to bank receipts, cash receipts, and Visa receipts. And this is where you might not be using all of those features. So again, to run those reports, we pop back into reconciliation reports. And this time we're looking for bank transactions. So when I pop into here, we go into bank, and we've got 3 reports, which I'm just going to highlight as favourites so you can spot them. It's the 3 referring to receipts. So you're probably familiar with a bank receipt, a BR transaction, but you might not be as familiar with a CR transaction, which is a cash receipt, or a VR transaction, not as commonly seen. What we need to do is run these reports for the same period again. So again, I would just be popping in my date. Apologies for the extreme slow typing. Just don't want to get that wrong. And that one's generated for me, okay, because I've got bank receipts. But if I go into cash receipts, and I would always recommend you run them just in case something's been put through incorrectly. And I'm just going to show you on cash receipts. I won't show you both. We're getting that message. So that means there is no transactions that meet that criteria. And that's fine. That means we don't need to reconcile any of those. However, if we've got them on the VAT return, we might need to start exploring what's going on there. So again, I'm just going to show you the bank receipts one, which has worked for me. And I'm just going to bring back my reports, and we're going to just quickly reconcile those. Now this should be, because you've got the last 2, the easy one. Don't want to curse you, but it should be the easy one. So what we're doing now is just reconciling this section here, trying to just pop a little mark without highlighting the transaction. So where we've got the green there, this section here against this report here. And again, I think you've got all the information you need in order to see this difference. So again, I am just going to give you a few seconds to see if you can get your answers across, bearing in mind the slight delay we have on the system. Okay. So we've got 1 showing on the VAT report. We've got 2 on the day books. Like I say, you're probably going to get this one straight away. And 20 seconds always feels so much longer when you're trying to fill in the gap. And there we go, all at once. And it's, if you've answered, you've got it right. Okay, so yeah, transaction A is a T9. Okay, so it will not be on the VAT return. T9 by default is the non-vatable tax code. You might have a different tax code for non-vatable, so just bear that in mind. You might be slightly different, but transaction 8 is on the T9, so the non-vatable tax code means it will never be picked up on the VAT report if the settings on that are correct, but it will be picked up on the daybooks report because the daybooks picks up absolutely everything. Okay, so I knew you'd get that one. The next one's a bit trickier, okay, and I'll be honest, I've popped this in here just to test you, okay? Do not panic if you don't get this one. It's not as commonly seen. So again, you might not have come across this before. We're looking at journal credits. So again, I'm just going to show you how to run that report first before we do the comparison. But we've got in VAT box 1 a journal credit using a tax code T1. So again, that might already be something's a bit odd for you. Why have we got journals showing on the VAT return? Because the majority of the time, they're non-vatable. So to run this report, again, we go back to our VAT return. And this time, when we're looking at the reconciliation reports, we're looking at nominals. And then here, we're looking at the daybooks nominal ledger. And again, I'm going to run that for the same period. So I'm not going to pop the dates in because I've got the report ready made for you, but we'd put the identical dates in, the beginning of October to the end of December. Now this report is slightly different because it doesn't just bring up the transactions we're looking for, it brings up other transactions too. So we'll see this in just a second. Okay, so I'm going to give you a few moments just to have a look here. Okay, should be able to see everything you need there to work out the difference between our day books and our VAT return. Okay, now like I say, this isn't a common scenario for some, so I'm not expecting everyone to jump and get this right. If you do, that's fantastic. But do give it a go if you can. I'm just waiting for one to come through. Hopefully someone's going to give that one a go. Okay. So first of all, the first thing I'm just going to point out is when we look at the VAT return and we look at the drill down, there's only one transaction type picked up by box 1. And there's a few coming through there now. Okay. So in order for a transaction to be picked up as a VAT element on the VAT return, it needs to be using the sales tax or the purchase tax control account. Okay, so it will not hit the VAT element if it's using any other tax code. So as you can see here, the only transaction using one of those control accounts is number 12. Okay, the other two are using your sales nominal code, and this one's using a different nominal code, which off the top of my head I can't remember. I think it's the sale of assets. So we've got only one of them meeting the criteria. Also, the journal debit is 1 on a T9, so it wouldn't be picked up, but also journal debits would not be picked up in box 1 anyways. Okay, only journal credits can be picked up in box 1 of the VAT return. Journal 11 is using a T1, so it will be picked up on the VAT return, but because it's used a sales nominal code, you can see here, to use that sales nominal code, that means it will be shown as a net element. Okay, so apologies, journal debit is gone to our debtors control account, and that's on a T9, so that will not show on anywhere on the VAT return. The journal credit will show on the VAT return, but as the net element, because this particular transaction is what we would suggest you do for a sale of an asset. Okay, so sale of an asset, and sometimes we suggest things like this for, I can't remember what the other one is. I've just just gone blank, but for sale of an asset, we quite often recommend you do a journal, and part of that journal will impact the VAT return. So the VAT element of that sale is transaction 12 because it's gone directly to the sales control account. It's using a T1 and it's the right transaction type. So there's 3 criteria it has to meet to be in box 1. If we look at transaction 11 and look further down in box 6, we can see that the net element is still showing on the VAT return, but that's in box 6 for the net element. So slightly trickier. You might never find yourself in that position where you're having to reconcile this, but that's why only one of them is showing. So well done, and thank you everyone for giving it a go. We're going to jump back to the slides now. And the slides that you've got there in the handout do go through all of this and show you what to compare one against one another. So you can see some examples on there as well. So reasons for missing transactions are, first of all, earlier unreconciled transactions, if you include them, will not show on the day books, but they will be on the VAT return. Remember, as you've highlighted, transactions with no tax value, so T0, T2, won't show in box 1 because there's no VAT on them. and T9 tax codes, or whatever your non-VATable tax code is. They'll show the day books, but not the VAT return. And all of those are fine if they're using the correct details. If you can justify it, that it's fine to continue. There is a report that shows you your T9 tax code transactions, and that's within financials, and you can run the T9 transaction listing there, and it'll show you all of your transactions using a T9. Box 4 is very similar, so you would run the same reports, but you're going to be looking at the net elements of those transactions rather than the tax elements of those transactions. And the same on your purchases. On your purchases, the reports are similar. So you can see here, we've got daybook supplier invoices rather than customer invoices, supplier credits. When you're looking at the bank, it's bank payments, cash payments, credit card payments, and the daybook's nominal ledger, but this time you're looking at the I've just had a little notification to say my sound's dropping, so apologies if it is. I'm hoping we've re-established that there. I'll continue. I've just got a little notification. It looks okay now. I think it's just a little blip there. And we'll move on to the next section there. So as I mentioned earlier, if you're on VAT cash accounting, it will give you reports relevant to your VAT return. Okay, so rather than running for customer invoices, you'll be running for customer receipts and customer refunds. So again, I've given it in the handout there, the same sort of treatment there, so you can see which reports you would need to run. You still need to run the same bank reports, bank receipts, cash receipts, credit card receipts, and it just shows you the reports there you would use. And the same with box 4. So that's all in the handout for you there. Okay, just going to go through some frequently asked questions. So this doesn't happen as much now because I think there's a lot more awareness about the different tax codes. But quite a lot when I was on technical support, we'd get, why is my box 1 figure not 20% of box 6? And essentially, it's because you've got those tax codes that allow you to have no VAT. So things like a T0 or a T2, they have no VAT on them, so it's not going to be 20%. But also now you've got things like domestic reverse charge under the CIS scheme, and they have things like notional VAT. So it's unlikely that you're going to have that perfect 20%. Why do my VAT figures not reconcile to my nominal balances? So again, this is a really good question, and we get this on a regular basis. And that's because the balances on your nominal accounts are always being updated as you're processing more and more transactions. So they're never going to return perfectly reconciled to one another. And if you're on VAT cash accounting, bear in mind you'll have all the unpaid invoices that are included in that nominal balance, and they won't be picked up until the transaction's actually paid. So they'll never ever reconcile. But it's a really common one that people will try to reconcile and not understand the difference there. And as I showed you earlier, you can run a report just to show those earlier on reconciled transactions. So if you've got a huge amount to work through, you can run this report to take a deeper look into them. Okay, so I am just going to run through a summary. So if you've got any questions, now is your opportunity to get them across. Michael is hovering in the background, so if you do have any questions, please do get them over. First of all, remember you've got that drill down feature, and that's a good way of investigating how a box is calculated. That detailed report shows you each VAT box per transaction and per tax code. Run the day books for the exact same period. And remember, if you've got a transaction missing from either the detailed report or your day books, then you just need to investigate why and be able to justify why it's on one and not the other. It's not saying you need to change anything, it's just saying just double check these. Lots of help and support on our help centre. So we've got some useful links there, but I'm just about to show you where you can find more information on our help centre. So if you go to sage.co.uk/help, there we go. In here, if you go into accounts, this will take you to our help centre, and we have a dedicated area for VAT. And in here, again, you can find the relevant information depending on where you are submitting from. You can also into here type in the word webinars. And apologies, I can never spell the webinars correctly when people are watching. And on here, it takes you to an option for the recording. So if you've missed sessions 1 and 2, you can catch up on there, or you can join our live sessions. So you can have a look at what we've got coming up. And like I say, next week is a very exciting week because we've got our next badge. So I'm just going to share a really quick video with you. We're going to get Matt to talk you through the Banking Excellence Badge, and we hope we will see you on one of those sessions next week. But don't worry, I will be back just before we end the session there.
We have some exciting news for 50 accounts users. Are you ready to revolutionise your banking experience? Join us for an incredible journey through 8 sessions from February the 4th right through to the 20th, designed to streamline processing and enhance efficiency. Simply attend 6 out of the 8 sessions and the quiz to test your knowledge, and you will earn your very own Digital Banking Excellence Badge. This will be added to the new Accredible portal, where you can collect and manage all your badges. From here, you can share your badges with colleagues, clients and suppliers to show your progression to becoming a Sage expert. Imagine a world where your bank transactions are simplified. Now, throughout these sessions, you'll dive deep into topics like simplifying bank transactions, managing customer receipts and supplier payments, mastering bank reconciliation, and revolutionising your bank by automating with bank feeds. We'll show you how to simplify your routine with bank recurring items and how to correct bank errors. Harness the power of e-payments and add your bank information to invoices for faster payments. Don't forget, to earn your digital badge, you need to attend at least 6 out of these 8 sessions and complete the quiz. Transform the way you work with the bank, get paid faster and automate your processing with Sage 50 accounts.
Okay, so that is the banking badge. Like I say, we're starting that on Tuesday, running it for 3 weeks throughout February, and we've got multiple sessions available. So you do need to attend the quiz on top of 6 sessions to obtain the badge. We'll talk you through the badge process as well. Okay, so I think that's it for us today. So thank you very much for joining us. We do appreciate you coming along, and we really do hope that you will join us on another session really soon. But for the meantime, thank you very much. Take care, and we'll see you soon.